as you can see here, so basically today we're going to learn about the differences between support and resistance and demand and supply in Forex market. Okay. Okay, I'm reading the. Okay, continue. So before I start the webinar, woof, why is like that? Let me edit some slide here. There might be something. Just give me a second. What is here? Mm. Mm. Um. Okay. Ooh. Um. mm, My slide is mixing up with. My apologies, guys. Let me see. Why I have this here? Just give me a second. Okay. Do I get this from my colleague? No. No, they're not gonna be. My God. My apologies. Okay, give me a second. I try to. What is happening here? Anyway, we just remove. Okay, fix it. My apologies. Okay, I'm back. Sorry. Okay, disclaimer. Okay. Everything in this video is purely educational in nature. All right. Nothing should be considered as investment or investment recommendation. All right. And risk warning. Trading forex and CFD carries significant risk to your capital and is may not suitable for investor. Okay. And about myself, my name is Peggy. I'm an investment analyst and a prop trader. Okay, so the agenda for today, basically, I'm going to do an introduction and what are support and resistance, what are supply and demand, what are key differences and relationship between the concepts. Okay, so introduction first. So we already know the Forex market, right? Understanding market structure is crucial for making informed trading decision. Two fundamental approaches to analyze price level dominate the trading landscape. So there is technical analysis approach, and another one is an institutional trading approach. For the technical analysis, we will use a support and resistance level based on historical price action and a chart pattern. For the institutional trading approach, they are using supply and demand zone, reflecting actual market participation and order flow. Okay, so what are support and resistance? So basically you will look at the charts. There will be support and resistance level. Okay, for the support level, where the price level buy interest historically emerged, preventing further decline. Okay, so basically the support, they were acting at the the floor, right? Like here, preventing the price to go down. Okay, and the price will bounce multiple times from this level before they rising. Okay, so basically the trader expect to buy, okay, at this level. Okay, so how you going to find the support level? So basically you look to your left, basically is here. Oh, this is the okay. Basically we know that support, right? Let me just remove. So I just want to into this one. Okay, for the support level, you look to your left. This is going to be your support level based on H4 time frame. So we will identify this our support level. So just a one line, right? One line here. Where is this a support level, price break above, become your resistance, and pull back up again here is your support level. Okay. And another one is resistance level. So basically the resistance level where the price level where selling pressure historically increases, preventing further advance. So here the resistance, they acting at the ceiling. Okay, so basically price is struggle to break above those resistance level, and the trader expected that price will sell from this level. Okay, so basically resistance and support level just a one line. Okay, horizontal line connecting multiple price high, which is you can just say like multiple rejection. For example, here you could identify this is your resistance level, and I would say that this is my fall background or stop hunting at this level. Anybody sell at this zone? If you were to sell from this zone, meaning that you spot the divergence on the lower time frame. Okay, here. So basically this is a fall breakout. Okay, here. Again, you have the question, what if you will identify the resistance based on only like swing high resistance level? Is this a strong enough? I have a question for you guys. Will you identify this one at your resistance level based on your swing high? This is your swing high resistance. Do you think that this is strong enough for you to sell at this level? I would just say here. Do I have? I don't have. Do you think that this is your key level for resistance level? Anyone want to answer? Don't worry, I'm not gonna call your name out if you answer wrong or right. Okay, so trust me, is a fundamental, is a foundation, oh no, it's a foundation for you guys to know how to identify the key support and key resistance level correctly. So basically, if I were to look here and then I were to identify this my resistance level, I would just gonna say this is my weak high. Okay, I want to say this is my weak high. Why? Because there's only one swing. For the resistance level, right? You need to find like price come for multiple time, and then they have a rejection or the weak, like a few times here. Like time here. They kind of multiple week, and that's your strong resistance level. If only 1 week, then you identify either you want to level out, like this is a weak high, unless there is other confirmation, like if price break above this level, what you guys need to do, you use the Fibonacci extension, right? If this only swing high here and then they reacted off extension 127, okay, for example here, then I may consider it's a price rising to this resistance again, I'm gonna sell if I see the rejection. Okay, I always wait for confirmation if price go to the key level, or you go to the lower time frame. That will be 100% projection based on the M15, and then I would say, okay, this is my first resistance level, which is M15. You could call this my multi swing high resistance level, because we have the, I just say projection, 100% projection right here. Okay, you know how to draw projection? You need to draw like that, a zigzag, and then you can draw the projection. Okay, 1, A, B, and C. This is 100% projection. So basically, it's the distance from A to B equal to B to C. Okay. Go back to the support level. Okay, your support level here, let's say I will identify based on H4 time frame. Again, if you want to identify the key level, you are a scalper, right? You can draw support and resistance based on lower time frame. If you know how to look for market structures based on M15. Okay, this is my resistance level. It become your overlap resistance level, right? Because this is your support, price break below, pull back, confirm with your price action here, and then you sell. Okay, why? Because price came from your resistance level on the higher time frame. This is H4, right? And H4, and H4 time frame closing with your price action, which is this one. Okay, so if you're a scalper, you already know that, okay, H4 closing with your price action is come from your resistance level. Now, you want to sell, follow the H4 time frame. You can go to M15 to wait for price to pull back to your resistance level, and then you sell. Okay, so this is your entry. Anybody get the entry at this level? Your confirmation is here. This is your resistance level. Look to the left, support. Then you may ask me, hey Peggy, why you don't draw here? Always set the rules. Okay, if you want to use Fibonacci to support your analysis with support and resistance, okay, if you want to sell at the discount zone, basically you're going to sell like 50 and above, right? Which is your premium. If price go below 50, you're not going to sell, because that is discounted zone here, right? If you want to wait like that, you may miss entry, because we always want to sell if price go to this zone, right? But In this case, you look here. This is used to be your support level, right? This is you identify your support level. I will just say this is your support level. Price break below, okay, they come to this multi-swing low support level here, right? 1 week here, or you could identify your zone, right here. And then you can see the rejection bounce off. So you look to here, lower low, lower high, okay, and continue to go higher. And the break below, where is your low here? The recent low is where is this level, correct? Maybe I will mark something like that. Okay, lower high, higher high, higher low, higher high, higher low. It's a lower high, but never mind high, the here. Okay, and higher low. Okay, this is not considered the high, right? Because the previous high from this one is this one. Okay, this is just slightly kind of pull back, just slightly kind of pull back. So my significant swing high is here, lower low, lower high, low up, higher high, higher low, higher high, higher low, and higher high. Okay, and this just slightly pull back. My previous low is here, it's not here. So whenever break, this is my low. So I would identify this is my support level. Okay, one price break my support level to come to this level, it's gonna pull back, it become your resistance, right? This is gonna be your sell entry. Okay, I will come back this zone for the supply later. Okay. Okay. Question: how far back time? How far back time voice should one look back to on the level price validation? Should it be 1 day, 2 day, or week or month? How far back to look back? Oh, okay. Depend on your type of trader. Let's say if you are swing, if you're swing trader, meaning you hold a position more than a day, right? You should look at your D1 time frame to identify the key level. Okay. If you are day trade, meaning you close the position within a day, H1 and H4, you should look for the key level. Okay. And within here, let's say, okay, if I'm the position trader, meaning I hold my position more than a day or a week, then I will identify my key level based on D1 candle, meaning that this is my support level. You can see that it takes how many days a week for price to come to this level. Okay, the highest one, okay, from this April 10, okay, and come back again is May 16. April is about just almost a month, right? Price come here. So if your position, you should look at the D1 candle, and this level, you can see this is your resistance level, correct? Price break above, you can see the impulsive move closing with green. Okay, and now gonna be pullback. Now it become your overlap. So one price touching your level, we're going to identify this our overlap support level. And at this level here, to support your level, you can use the Fibonacci level. That's gonna be 61.8% fit here. And this is gonna be the zone with 61 and 6.8% Fibonacci level, and this is going to be your key support level if you are position trader. Okay, and then you hold to where? You hold to your next support level. Next resistance. Either, of course, this is going to be your first resistance level based on the week, right? On the week. To me, if I were to buy from this support level, I always put my take profit at the body. So meaning if you were to buy from here, this is my take profit. If you were to put at the wick here, you will miss out your TP. Yeah. But, okay. And this level, price touch on the extension and then falling. Okay, so you can copy my techniques, like, because so far I have been doing this. If I were to buy, okay, I put my take profit, you look to your left, put on the body, not the wick. If you were to, then you put the stop loss for the buy entry below the wick here for stop loss for the buy entry. For your sell entry, you sell, for example, you sell here, just for example, okay, you sell, you enter sell here, your stop loss you put where? If there is a wick here, for example, if no, for example, yeah, let's say if I were to, let's say if you were to sell at this this is not a good example. Let me show you for the sell entry. Okay, for example. Okay, for example here, like how you place your stop loss for the sell entry. Go to another. Okay, here. For example, let's just say you sell here. Let's say you sell here. Let's say you sell now at this at this resistance level, for example. This is your swing high, the recent one. Usually I don't put my stop loss based on this swing high. I will put my stop loss based on the second swing high. Because most of the time I observe, right, if I were to put slightly above here, sometimes price might come and hit my stop loss and then falling. So basically, I will put my stop loss above the second swing high on the left, which is this, the one. I put my stop loss above this swing high. Okay, let's say you put somewhere this swing high here, you might get stop out because of this wick. And now, what you think? Your heart pain, right? Because price closing with your price action and then falling based on H4 time frame. This is how I place my stop loss for the sell entry. For the buy entry, let's say if you buy here, okay, why I put my stop loss? I put my stop loss below this swing high, not this swing high. Okay, something like that. For the buy entry and then price rising or target, you could take care for your first TP, or you can use the trailing stop loss, you can take profit. Now it's closing with your, I'll come back here again for your demand zone. Okay, if you are scalper, if I'm doing a goal, I'm doing scalping, I will draw my support resistance based on M15. If I saw those like chart pattern, sometimes I even like scalping or in M5 if I see very nice price action. Okay, another one for the resistance level. Before I move on, you look here. You look at this level, right? Okay, now price come to this level, and let's say if you identify this your resistance level, right? You will identify, okay, this is my first resistance level, and you can be a price have rejection, and it seems like they're going to close above this level, which is, let's just say like this level. Okay, let's just say this price 34, 33. Okay, now look, you need to pull out the RSI. I'm using RSI to identify the overbought also as well. Now you go to the lower time frame because we want to know whether this is gonna be the stop hunting or the false breakout. You go to the lower time frame. Let's say M15. What do you think? M15. Oh, You want to draw like that, yes. Price going to break above here. That's why you the people you know, buy from this level, right? And then you can see that and the rising. Okay, from here you go to the M15. What do you see in M15? Price come to close the gap. Okay, don't forget to know that this is the wick and the body. I will come back here later. I think I should just come back here later to explain more on this my box. I'll come back to explain this okay, this later. Let me just finish off the support and resistance first. Okay, now I'm going to move on to supply and demand. So basically, supply zone, where is the area where institutional seller enter the market with a large order? Okay, so how you're going to spot? You look for the sharp price drop, okay, from this zone. Okay, the logic, the unfilled sell order remain creating selling pressure when price return. So basically, supply and demand. For the supply zone, price come from your resistance level, closing with bearish engulfing candle. Okay, and you identify this one is your supply zone, and then they will say this your bearish order block. Okay, so you can see the logic unfilled sell order remain, meaning that the logic they will wait for price to pull back to the box and then you sell. Okay, identification, look for strong bearish move away from consolidation area for the supply. For the demand, so basically you wait the area where institutional buyers enter the market with large orders. Okay, sharp price rarely originating from those zones. Unfilled buy order remain, creating buying pressure when price returns. So identification, look for strong bearish move away from consideration area is the same like here for the support, right? You might see something like that with price action, or the red candle here, and then the next move is gonna be the green, which is the bullish engulfing, and then they're gonna draw the zone is your demand zone, which is your bullish order block. Okay, which it look like this. I will come back here again. Okay, for example, okay, I saw, okay, this is your supply zone, right? You can see that they're ending with bearish engulfing. Okay, and this is your supply. If you were to stretch all the way to the left, this is the zone. And they would identify or call this your bearish order block. Okay, well, you can see that this is impulsive move with a large order, right? And over here, within here, there will be unremaining filling unlimited matching order over here, unmatching order. So basically, they will wait for price to come in the box, okay, and then you sell. So this is supply, which is different from the resistance level. We're not going to identify it our resistance level. Our resistance level is here, right? It's our resistance level. Okay. What about the demand? I have a question. Is this is our demand zone here? Could I say this my demand zone? Is this my demand zone, guys? Anyone? Is this demand zone here? Don't worry, I'm looking at the question. Anyone can answer? Could I say this is my demand zone? Based on H4 time frame here, could I say this is my demand zone? Nobody answers. I wait a little bit more. Okay, no. Okay, so this is not identify my demand zone. Your demand zone is this one. This is your demand zone. You need to wait for price to closing with engulfing candle. This is not engulf, right? This is not engulf. Okay, this is your demand zone, which is I don't have demand zone. My demand zone I will call the bullet at the block. That's why they identify your bullet at the block here. Okay, so basically this zone still fresh. Okay, whenever price come in the future, we may consider to buy at this level. Okay, this is a demand zone, but there's a reason why price come like bounce from this level, because there is the demand here on your left. Stop here for a while. It's here. This is the demand zone. Price come in and then rising. And if you were to draw here, this is the support level. You see? Whenever you identify this is your support level, right? If price going to break below your support level, you need to look below. Is this below? Is there is a demand zone or anything that price is going to like reverse? Is somewhere is around here. The next support level, which is aligned with support, this is going to be your second support, right? Yeah. Let's say if price falling, let's say you buy here, you can stop out, and then you spot, okay, there's a demand here, and another next support level, and then you can buy. You can see that price come with H4 and then rising. What if you go to H1? What do you see in H1 time frame? Okay, H1 time frame create your head and shoulder, right? Do you see head and shoulder here? Do you see that before market structure? Okay, now lower low, lower high, lower low, lower high, lower low, lower high, right? Lower low, lower high, and then lower low, lower high, lower low, higher high. They break market structure shape here. Either you want to change of character, market structure shape, okay, always same meaning, right? If you trade head and shoulder, what is this? This is your, okay, let's say you trade with only like SMC or ICT, price break above, okay, make a higher high. So this gonna be your buy entry, okay, for SMC or ICT, right? Price come between 78.6, 61.8 and price rising. Okay, we don't know about that, but we'll say, okay, price already create the left shoulder head, and now is your right shoulder over here, right? Boom, 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 boom. This is your entry, and this is your confirmation. And price break this high to create the new high here. Okay, now the changing as well from your bearish trend, right? Bearish to bullish. You see, if you look at H4 and then you can't see the confirmation, you can't see those like a chart pattern, you can go to the lower time frame. Right, to look for those patterns. And within the okay, this is a trend line, right? This is your trend line. Look here, within your 67.8 and 78.6. They also slightly below here. They also have the demand rally, base rally. You can see the price. You have like at least 3 confluence for you to buy, right? Your demand in the H1, we have between 61.8 or 78.6, or you could just say this your discounted zone below 50. You're gonna buy, right? You can see that. And they also have the trend line, price break above your belly trend line, pull back, right? And then you buy up. And also price come from your demand in H4. Okay, so basically here you go down to H1, price rising, you see something like that, you need to wait for price to pull back at least 50% and below, and then you buy. Okay, so this is a demand. Any question? Okay, for example, I will do another for the supply. Okay, now I go back here for my supply zone. Okay, based on H1 first. No. Okay, look for D1. Okay, now look for the D1 candle. If I were to see like that, of course there is no supply zone here, right? Because there is no other block. But I would highlight the wick and the body. Whenever I see really long wick like that, I would just say, okay, this is my supply zone, or the zone that I will just monitor. If I see the confirmation, I'm gonna sell here. You say, okay, this is your supply zone. I would just say this is my supply zone. Okay, this is my supply zone. Go back here, right? Back here. I go back to like this level. Let's say based in H4 time frame. Whenever price come to the zone, first you will see the rejection right here. This is very kind of like you might get a stop hunting based on the H4, because price closing with price action. Okay, then we're going to sell at this candle, right? We sell at this candle opening here, and then where closing is above. Okay, you can see that, and then it seems like, is this price going to rise, go above? But you need to keep in mind, this is your supply zone or the wick based on D1 candle. Okay, D1. Okay, what you need to look for, you need to go to the lower time frame. Now I teach you how to look. What do you see in M15? Do you see the supply in the lower time frame for your confirmation, which is your valid at the block, which is this one, right? Whenever price come here, okay, whenever I see this like that, I'm really happy, because I will wait for price to go to this box, and then I'm gonna sell this. You can see that, right? Price go to your balance of the block, and then you sell here. What's about M5? Okay, the M5 will look like that. Okay, it's just a fall breakout. That's okay, still within the box. Okay, right here. You can go to M1 to look. What M1 look like? Your other block here, your M1, just a floor breakout. The M1, you can see that whenever you see, it seems like price going to break above, your belly to the block. No, you pull out the RSI, you will spot the divergence in the lower time frame. Price make a higher high, right? Indicator is make a lower high. This is form with bearish divergence. No need to be panic. Price still within your zone. It just slightly break here. This is a M1. Okay. Go to M5. What did the price go all the way here, right? And closing with your belly and gap. In the lower time frame, this also your supply zone, right? Which is on the block here. In this is M5. Okay, still within the zone. Okay, price come, you just sell. And then you can see the M5 price make higher high, indicator is make a lower high as well. So no need to be panic. And price, you can see that ending with price action, price falling. Let's say you enter somewhere around here, you will target here is 180 pip. Right, 180 pip, you put one lot, you would have earned $1,800, right? 0.1 lot size, $180 for here. And then you can see price rising. Now, still closing with bearish move. If price rising here, may consider to sell, right? You can see that this is another enter. You enter here. Your entry is here. You can see that enter it here. Over here for scalping, this is gonna be your demand, right? This is gonna be your demand zone. Okay, this is your demand zone, meaning that if I scalping, I sell here, this might take profit. Let's just see. Boom, stop out. Definitely I will got stop out based on I scalping here. If I sell here, again, you can see there's a gap. You make it, let's say I will get stop out based on this swing high. Let's say I put here, I will get swing high here. Let's say I got stop out, right? What you need to do, no need to be panic. You also monitor in the low time frame. You will see that price go to where your psychological number, which is 3450, right? And what do you spot here? Do you spot the triple top? Okay, 1, 2, 3, and then falling. Okay, let's say you get a stop out. Let's say if I sell here, we have another sell. Okay, price rising, and then we sell again, and price got gap up, and then hit the stop loss based on this, like say swing high here. Okay, and after that you monitor in the M5. What do you see? Price is still within our supply zone in a lower time frame. You can see that you can see the triple top here. Okay, you go to M5. What do you see? A lot of the rejection, a lot of weak. This is a resistance level in M15. Let's say you got stop out, you're confident, if you see like that, you need to practice, okay? Then you sell here. Your take profit is still where I will put at the demand zone here. Okay, again, from this level, this is your support. This is your support. If you want to, let's say if I sell at this candle, price falling, this gonna be, if you trade, this gonna be a TP1 and TP2 here. Okay, and boom, they go to your take profit if you sell, right? And do you see the demand zone based on M15? You see that come to the demand zone, you can see the rejection, right? But why price break? Because the lower time frame is really, it comes stronger than the higher time frame because price come from the supply zone on the D1. So if you want to buy in the demand zone in M15, you can pay for the bounce. Can you see that? From here, rejection, okay, closing, the higher price, they go up to this level, is about 80 pip. And after that, they follow the higher time frame and then falling. So you can trade based on the demand and supply, based on lower time frame for scalping, you can do that. But you can't buy from this demand zone with M15 and then you hold all the way up. No. Because why? This is our supply zone in D1. okay, in D1. Look at M15. Price going to drop here. This is your, in the bigger picture, this is your support level. Okay, price will come to this level. Boom. Okay, to this level. All right, this is how you're scalping. If you want to like find the confirmation, and from this level, if you go back to H1, you will have more confidence because price closing with bearish engulfing candle, and price also have the bearish divergence here versus the I side. And then you go to H4, you will see the H4 closing with your price action is here, right? Don't always stick to the lower time frame. We go to the lower time frame. We want to see what will price react in the lower time frame, because if you always as the H4, because one candle it represents 4 hours. Within one candle here, which is 4 hours, we want to see what is happening in 4 hour candle, so you can go to the lower time frame and find the entry. Okay, any question? Okay, by the way, I did not monitor the question in the app because there's so many like spamming messages here. Okay, no question. I pause here for a while in case you guys have any question. Okay, I will just go to another slide. Okay, now I'm going to talk about the key differences. So for support and resistance level, so basically based on the price history and pattern, okay, you can use horizontal lines focused on where price reacted before. Reactive approach, multiple touches strengthen the level. Psychological number, which is whatever that ending with 0 and ending with 5. Okay, for supply and demand zone, basically based on the order flow or market structures, you can look for the belly engulf, like closing with engulfing candle. Okay, use zone and area. Okay, focuses on where price move. So basically, let's say if the supply zone here, right, the short candle, that would be like impulsive move, something like that. So this is gonna identify at your supply zone. Okay, and proactive approach as well. Fresh zone are stronger. So whenever you identify this is a supply zone, okay, when price come, you're gonna trade when price the fresh zone, the zone is fresh. Okay, first time come you sell. If price going back up again, you're not going to sell again. Okay, we're going to sell once only. Price come to the zone, you sell. Go back up again, you're not going to sell. Okay, and then this is the level where institutional level they are waiting to sell. Basically, any question? No question. I will move on. The key differences again for the time perspective for support and resistance. So basically, you look backward at historical price behavior to predict the future reactions. For supply and demand, so basically they identify the current market imbalances that may affect future price movement. Okay, for the strength assessment, so basically support and resistance its strength increases when more touched and longer time hold. Okay, for supply and demand, the strength decreases with each stage. Fresh zones are most powerful. So now the next one, relationship between the concept. So basically now if you want to trade with supply and demand, support and resistance, actually they can complement each other. Okay, rather than competing approaches, so support, resistance, supply, and demand can work together. Basically, you find a confident trading. Look for the area where support and resistance level align with supply and demand zone with higher probability setup, which is here. Just now I show you the example, right? For example, I will just stick with XAUUSD right here. For example, okay, that would be the no. Let's say go to H1. Maybe H1 I can find. Okay. For example, here, I would identify, look to the left, right? This is my resistance level. Okay, and then I have the supply zone here. So I will sell at this level, right? This is the support, become your resistance level, change the color. And then we sell here. Let's say I just sell, you will get, let's say 150 pip. And another one with the order block. Here, look to the left, right? Okay, let's say, but this is the current price. Okay, let me try another. Paste. Okay, here. Okay, I'm going to sell. Okay, now let's say you see something like that. We know that price is like closing with like kind of M pattern right here, correct? And if you trade with chart pattern or resistance level, you will identify that this is your resistance level. And when I see the wick, I will just highlight the zone like that. Okay, but I will identify I'm gonna sell here. But above this resistance level, let's say this gonna be my resistance level. I put here my first resistance. Above my first resistance level, I saw the order block. Oh my god, supply zone. I would highlight this too. Okay, and now price is come from my overlap support level. This is my support level. Okay, then you ask Peggy, why you draw this on the swing high? You can see that before price break above, it's just a one like weak high, right? You can see that on your left, there is nothing. This is not my level. Okay, this is not my resistance level. Nothing here. Okay, I just put, okay, this is gonna be my weak high. I don't have. You can see slightly price, reacted and then falling. And then it's break above this resistance level with the impulsive move, which is this candle. So I would just, okay, this is gonna be my support level now, which is this one break, right? You can see the impulsive move imbalance here, break above and price falling. Okay, and you can see the rejection. So now I'm going to sell based on H4 time frame. Okay, based on H4 time frame here. This is gonna be like, I think price is touching the extension. Okay, no extension right there. Never mind. In the lower time frame, which is H1, I will see like this. I will see chart pattern and either you say this your double top or in pattern, price break below the neckline. This is your neckline here. So for we thought to sell here and then falling. Let's say we're gonna wait to sell at this level. Boom. Now you sell here. If price rising again, we're not going to sell at this resistance level because the next level, which is the POI, is over here. This is gonna be your POI or point of interest is over here. Because if price going to falling from this level, you're gonna fall to this, right? But if rising go back up resistance again, likely they're going to break and go to your supply zone here. Boom, right? See. Okay, so if price go back up again, first time you sell, you happy, you close. Okay, if go back up again, you're not gonna sell. Likely you're going to break because they are looking at this supply zone here. Okay, you sell here, you did not close, you got stop out, or you think, oh, you did not close, and it say, okay, I'm going to sell at this supply zone where your stop loss. This gonna be your stop loss. You're not going to put the stop loss. Oof. What am I doing? Okay, you're not going to put your stop loss. Oh, okay. Based on this swing high, right? You might get stop out. Right? I will put here. And then you can see price falling. Let's say your first entry right here, you did not close. You have another entry here, price falling. Okay, you can see your price action, right? Then you hold. Right? Either you close here first entry and then you hold at above one. It's up to you, or you confident and then you hold. Right? And then boom, back. Go to your support level. Okay, so don't be panic. You trade with supply and demand or supply and resistance. This is the way to go. Go here, sell, it go back up again, look for the supply zone because they're going to your POI, which is here. And that's going to be your take profit, which is at this level. Okay, price might fall to this demand. This one could be like demand zone. Where's my demand here? And in the demand zone here, I also have my support level, which is my overlap support level. Okay, let's see. Oh no, now they go back up to where? To the supply here, and they see your resistance level. So basically, I'm waiting to sell at this level, basically based on H1. This might trace it up, but it seems like, okay, be patient. I think price might go to this level and then falling, and then I target here. I have my pending order here at your own risk. If you want to follow, and this is the way to go for the sell entry. Okay, this level it breaks, so I'm not gonna looking at this level. The next key level I'm looking, which is here. Overlap and have like demand zone here. So basically I'm looking at this level, and price could make the lower low, lower high, continue. If price break above first resistance level, this one you could identify as your second resistance level. Okay, they need to like go back here and then falling to target this as around this price. Okay, this level. So now you to see like that. If anyone sees something like that and then you chase the market, no, I'm wait here. And you see there is a wick. If you want to go in the wick here, let's say if you draw from that like that, you see the rejection. You need to go to the lower time frame. What is in the lower time frame? okay, it's good to go because you can see the price action here. Then you can sell. Okay. Okay, now based on lower time frame, there's already confirmation for you to sell. If you sell now, based on the week, this gonna sell now, right? Right here to sell now here for scalping, or you wait for price to go up again. But to me, sometimes if you say that for scalping, I might enter, but price falling, I'm not going to sell. I still wait at this level. I will combine the Fibonacci level as well. Since I'm doing the USD, I just do the same thing that like, you know, 50% here. Okay, 50% here. Okay, let me finish off the slide. Okay. Yeah. Okay. And multi-time frame analysis, I already show you guys. Use support and resistance on higher time frame and supply and demand on the low time frame. Market context, support and resistance for overall market structure, and support and resistance for precise entry on exit point. Okay. That's all for today, guys. All right. Thank you so much for joining. I hope you guys learning something. Okay. If you have any question, you can ask me because I think I already late by 5 minutes. It's okay. So for USD, here is your entry at your own risk. If you can go, okay. If you can take risk, you can go for it. Okay. For this is a USD based on H1 time frame. For gold, XAU USD, basically I'm still waiting at this level. Okay, this is my first resistance, so I'm still waiting to sell at this level because they also has the somewhere around here. Okay, so around this price. Okay, around this price, you can look, or maybe up to 61.8%. Okay, so this is the level I'm going. I think I'm waiting since yesterday to sell, but price did not. They just came for the support level, right? You can see in H1, resistance, break above, multiple touches. This is your resistance level. If price coming back up again, are you going to buy? No, it likely is my break. Okay, it likely is my break for support level. Another zone that you're looking for, if price coming, this is gonna be your second support level. Okay, which is around this level. All right, guys. Okay, let's say price did not react to 33.40. This is your demand. Okay, this is your demand zone. All right. Okay, guys, that's all for today, guys. Thank you so much for joining. I hope to see you guys again in the next webinars. Okay, happy trading. Good luck to you all, guys. Bye for now. Take care.